This is Dan Max, the trading agent. This is a stock trading and recap channel that I wanted to share to the masses. In a probability game, there's no certainty. Here are my insights and predictions.
This is Dan Max at eXp Realty, aka the trading agent, doing a little video about gold and just how cheap it is relative to some of the markets, but then also just the personality of gold, how it compares to the market, because there's a lot of misconceptions about gold as an inverse to the S&P 500 or that it only goes up when the market's going down, basically, and it's not really that simple. Let's zoom in and start with the Dow to the NASDAQ. And, everyone's, well, why would you start there? Well, keep in mind, the first commodity bull market that I remember in my 20s started when the NASDAQ peaked. And the NASDAQ got crushed. And what do I always tell people? Money just doesn't disappear. It rotates. It goes places. The Dow Jones, which used to be primarily made up of commodity industrial service companies, that ratio to the NASDAQ is back at bubble highs. Imagine that. Thanks to All Star Charts with his great charting. Check him out on Twitter. Give him a follow. Smart guy, team, whatever. They do well. That's just interesting. So there's a lot of money over, chasing the NASDAQ. Let's just start there. Because again, if you've watched my other video about the tech war to come and how money will rotate out of tech at some point into commodities, this might make a little more sense. So here is the, what did I want to look at real quick? The gold chart, just in general. A lot of people have in their mind that gold didn't, it's kind of been shitty. And, it has underperformed since 2011. No one's going to doubt that. But notice what happened in 2000 when gold bottomed at, the GLD bottomed at 276. It went up to 1932, starting when tech topped in 2000. That is all you really need to know. I could end the video right now and you could say, holy shit, you're right, Dan. When that money rotates out of tech, it's going to find its way into gold and commodities and whatever. I mean, we could pull up other commodity charts. Just trust me, check their charts, look at their bottoms in the 2000s, early 2000s, and notice how they literally outperformed everything going forward. So gold compared to the S&P 500, this is where it can kind of be a little fishy. Let's pull up the spider and just kind of compare it to the GLD. And let's start on the same time frames. Up, peaked, down, big up. Obviously, S&P 500 has been absolutely bonkers. But if you overlay that with gold, you'll notice gold peaked, gold started rising here, and then they ran up together into 2008. It should be very obvious. You see how they both went up into 2008. So money was rotating out of tech and into gold. Now, there are periods where, again, gold led, obviously, coming out of the financial bubble because they're printing money. Well, now we're printing money even harder, and it's finding its ways into different assets. A lot of people say, Bitcoin's the future. I don't know anything for sure, but I do know gold's been around for 5,000 years. It is a relic, whatever you want to call it, and make fun of it. Bitcoin and all these names, I mean, again, they've acted great. You can't argue that. So let's just, it's one of those things where I like to think that they complement each other. There's plenty of space. There's how many trillions of dollars in tech and bonds all over the world that's being printed, that if it all finds its way into a tight market like it did when Bitcoin would start rising, gold and silver can act accordingly. So as you notice, from the early 2000s up to 2008, gold did pretty well compared in relative to the SPY. They literally went up together. You can see it very clearly here. They went up together, and then the SPY pulled back. Gold kept going, and then gold peaked in 2012 or 2011 as the SPY was retesting the highs. Unfortunately, gold found its peak, and then since then has been crushed. I've always attributed it to more of I always thought Yellen and her crew were the biggest killers of gold. They started the gold smash with the feds. It's been a never-ending battle, and so since 2012, 2014, has gold lagged? I guess, but notice the market went parabolic in the last, 3 years after COVID. I know that doesn't look like the S&P 500 per se if you zoom into now, but there was volatility in 2018, and they both run up together. So this is one of the things I tell people. It's not as cut and dry as it seems. If you're not observing all the factors that go into the markets, that's where you need to know what's going on, because sometimes some of these currency crises like Turkey, Venezuela, all these countries, what are they doing when they're having cash crunches? They're liquidating gold. They're pushing the futures market down short term. Now we're at this point where ultimately money transfers from weak hands, paper hands to diamond hands. That's where we're at in the commodities market. I really feel like there really won't be any more lows because there's constraints when it comes to mining, drilling, whatever you want to call it. There's not enough supply versus the demand that ultimately will come from the future that demands need. You know, what ultimately becomes of this world that is tech run is going to need commodities. And so precious metals will be another winner in that. Keep in mind as you go into the end of the year, tax loss selling, market gyrations. Could gold go sideways into the end of the year? Abso-fucking-lutely. If you study gold, you've always noticed that it has mid-December pullbacks and then rips, or it actually bottoms in December. We could get into that real quick because I think a lot of people might not be familiar with this game. Here's a December bottom. Here's a December bottom. Here is a bottom going into the fall. What was it? The pullback here that ended in December of 19. I mean, gold loves, if it's been, if it's hanging out near the lows for the year, it will stay there. And currently we're near the lows for the year. No, it looks like just a base year. But as I showed on my daily chart, if you look at gold, there's clearly a W pattern. I mean, it's very obvious. Free money retest, as I call it, Wu-Tang. So that's my perspective on gold. I like silver too. It's got a head and shoulders bottom on the daily. It broke the downtrend. It's still relatively cheap. I mean, it's amazing how cheap silver is comparatively. But keep in mind, this blue range in the silver, SLV 20 area, has been resistance, resistance, resistance. Is it now support? Support equals resistance. That's what the saying is. So I hope this helps keep in perspective of the short term versus long term, because again, I can't predict the short term movements in the gold and silver as well as I'd like. I know that the contracts futures rolling over will be coming first week of December. Correct me if I'm wrong. And those types of things matter, since people have to roll into different futures contracts. And then also you have the end of the year tax loss selling. Could it be volatile into the end of the year? Could miners lead? That's the question I'd be asking. I pointed this out about the GDX on the daily. People were just, I would not shut the hell up. I said, this is a head and shoulders bottom. We got the retest by the Fed at 31s. Could it come back to channel low? Fuck yeah. Who cares? Could it come back into the 33s? Yeah, but just keep in mind, what ultimately is happening here is a big paper hand transfer to diamond hands. That's what's going on in the precious metals market. If you don't believe it, study the past to know the future. I hope that helped. A little off topic, a little bouncing around, but the goal is to kind of show you as many variables as possible when it relates to the precious metals market, because when tech money does need a home, it's going to come into commodities. It's going to come into precious metals. There are rotations. Never forget this. Money just doesn't disappear. It just rotates. It finds new homes. So if the tech bubble ends, I mean, let's all call it a bubble. Anyone who doesn't think tech is in a bubble is just crazy, but doesn't mean it can't go higher. That's all you have to keep in mind. I'm not shorting tech here. It feels juicy as hell to short, but I'd rather be late than early, or I'll just play it through the precious metals and commodities market. Either way, you can short tech, long commodities, I think, over time. Just pick your entries well and limit your losses. So this is Dan Max at eXp Realty, aka the trading agent here, with just a gold review versus the markets. I hope this helped, and I'll talk to you guys later. Oh, check out the Discord board if you have some time. Oh, apologize, throwing in a little bonus here. The Dow to gold ratio, someone's asking about it. If you drew a trend line, you could see that we are right at the trend line. So if gold can get over this, the gold to Dow ratio, that would hopefully certify some money would be coming in, because you're also making what looks like a double bottom here. So I wanted to throw that in. I like the gold Dow to gold ratio. It looks like gold will be taking, will be gaining value against the Dow soon. Just keep that in mind. I apologize for throwing that in at the last minute. Thanks, guys.
Thanks for watching. Please subscribe if you like the content. Also smash the like button, share with your friends, and add a comment. If there's a topic or stock you'd like me to give you insight about, let me know in the comment section. I'll do my best to answer your question. Thanks.